Surprise, surprise, we've got a rally underway today. We're going to talk about it. Let's just jump right in. I want to talk about the key events that are going on this week. Not a heavy week out there, but you've got the October PCE inflation data coming out today. You also have the Q3 GDP data coming out tomorrow. The consumer confidence data also tomorrow, and then new home sales data coming in the rest of this week, durable goods, so on. And then remember, guys, though this is a light week, because people are away from work, it kind of makes sense that we see the market doing what it is right now, where Bitcoin's trading close to 90K. The real question is, how does this hold? We put out a poll this morning. This week features a light economic calendar, but could we get a surprise Santa rally before the year's end? Remember, we still have another week heading into it. After Christmas, there'll be a few more trading days. But right now, everybody's saying no, not a chance for the 100K incoming. It looks like it's going to be 2026. Now, we're going to break that down, give you guys some insights into what that might look like going forward. I want to go to a clip real quick because this is the global macro outlook going into 26. Take a look.
If you look globally at the moment, everything is just creeping higher. So JGB yields creeping higher because of rate hikes. In France, yields are climbing higher because of the fiscal situation there. We saw the Bundesbank report on Friday out of Germany. That's added upside to global bond rates. And then we saw that kind of hawkish hold from the cut from the Bank of England last week, which is all adding upward pressure. And I think the interesting thing here is the outlier potentially is, what's going on with the Fed. One of the main themes in this year has been fiscal largesse, and I don't think that's something that's necessarily going to be going away. We're heading into a midterm election year. The Republicans aren't polling particularly well, and we may see a situation where Trump needs to kind of pull the fiscal levers to try win the electorate over. But one thing I'm kind of looking at is, okay, if Trump has his person in the chair and they're not able to enact his rate cutting agenda, what happens then? The pressure that he put on Powell this year could be even more intense on whoever gets the top job next year.
All right, so everything kind of boiling down to rates and trying to deal with the economic outlook here in the U.S. And I would agree that I think the Republicans are in a bit of a hard spot right now just because of the economic condition in the United States around affordability. And we'll get into what that's going to look like, because one thing that they cannot have is a government shutdown. That could possibly be brewing, though, right now. If you look at Polymarket, it's still somewhat flat. If you zoom in right there, it's kind of up and down, but I anticipate a lot of this is still unknown, mainly because of what's going on in D.C., which is nothing right now. Once we come back from the new year, that's when you'll start to see an accelerated move in Congress. And the question is, will we get the shutdown going forward? Now, the new Fed chair is what that analyst was referencing. And it's important to note that when you look at these Fed chairs that are potentially in the running, Hassett has been in a position that is very aligned with President Trump. But of recent, he's been kind of talking a little bit more like a Fed chair. Now, that's trying to keep the market neutral. Maybe that is a strategy, but he is the leader right now. Let's go take a look at this clip.
People familiar with the situation say the president could name the next Fed chair by the first week of January, maybe a little bit later, after interviewing the last candidate, Rick Rieder, in the final week of the year at Mar-a-Lago. October 10th, CNBC reported that Bessent narrowed the shortlist from 11 down to 5 candidates. November 30th, Trump telling reporters, President Trump, that is, I know who I'm going to pick, and everyone thinks it's Kevin Hassett. Now, one person familiar with the president's thinking told me, this is the most powerful man in the world making one of the most important decisions of his administration. A committee is not going to decide. Joe, having looked at all of this and talking to, a lot of people over the weekend, I can't find Bessent putting his finger on the scale for any particular candidate. What looks like he does, he may put his finger on the scale to bring it back to neutral, so the president has a choice between all these candidates.
I think Hassett was getting hammered. I'm not really sure it's fair.
Right.
And I think they want to say, look, it might not be Hassett. In fact, Waller just had a really strong interview. What do you think of this guy?
There's a thinking about Waller that I think is maybe not appreciated, which is that it may be that the administration is beginning to understand the chair himself cannot cut rates. They need the committee. Right. So who's your best person to have in that job if you want to get rates? It may be Waller in that case.
That's a good statement there, I think, because that is exactly right, is the way that you have a chair that can convince the rest of the Board of Governors. But the pressure will still be on right now. And I think also the other advantage that, remember, it's still a vote. So the likelihood of having more in alignment with Trump's policies would, of course, benefit that if you're pro-cutting. Some people are still thinking that maybe we don't need cuts. This is a thing that I still am up in the air on because I think it has so much impact on how the market performs, but the problem is that inflation is still a big issue. Let's go over to how you're going to deal with some taxes today. First of all, not tax advice, I'm not giving you, but there is news out there that the clock is ticking for crypto tax loss harvesting. And the way it works, really, the way I've done it is pretty simple. If you made profit throughout the year, let's say you bought in 2024, because if you bought in 2025, it's likely that you're down. If you bought in 2024, you probably had some profit taking that occurred in 2025, but you may have had some out there that you could offset those capital gains with, which you can offset, a 1-to-1 on capital gains. So if you made 50 and you lost 50, that would be a 0, providing that you made profit on 50K. But if you didn't make any profit, you can still go against your adjusted gross income. And there you can get up to 3K if you're married and or single. So there's some benefits here that you guys need to be aware of. Check out with your own tax advisor, but you may have an opportunity to reduce your adjusted gross income by up to $3,000. That may affect you even on a tax section out there in terms of what your pay is. Other things you can do to kind of plan for some tax moves is getting into some IRAs. And IRAs, of course, are traditional tax vehicles. A lot of things happening out there. And with iTrust, of course, you can do that very easily and very quickly, and you can take advantage of it. Now, everybody has a little different, position, so always consult your own tax advisor and or get with the tax guys over at iTrust Capital. They'll help you out. Did you guys know also you can get physical silver from iTrust Capital? They just put out a release here recently, so you can invest in both gold and silver, but you can also get physical delivery. So kind of an interesting spin there with iTrust. Check it out. We'll leave a link down below. It's a $100 funding reward just to get started and get going out there. Other things I want to hit on right now, you look at the back and forth between Tom Lee and the Fundstrat. Tom Lee, if you guys don't know, he is the head of Fundstrat, but he's also the head of BitMine. BitMine, of course, very influential in the ETH space. They're a digital asset treasury. Fundstrat, more of an investment vehicle. And there's analysts within that group that are claiming, no, we're not going to see a Bitcoin all-time high, but you've got Tom Lee over here saying we could see Bitcoin doubling in January. So a lot of people kind of came after that. But the point is, I think that maybe Tom Lee's, basis is looking more long-term. Now, granted, people would say, well, what about January? That's the question mark right now, is what happens in there. Now, what we are seeing right now with Bitcoin is, of course, it's edging toward 90K again after being down well below that. Speaking of one of the Fundstrat guys, this is Sean Farrell. He kind of hitting on the whole point that we might be entering a very unusual phase, and that is the anger stage. If you look at the cycle there, this is potentially where we could be, meaning that we could see some more dips coming into the market. And I don't know how you guys are playing it. I've been, slowly moving into, over this year, moving in and out of profits into reserve cash, because I do think there is going to be some dips that you can take advantage of. There are some ways to benefit against that, even if you want to hold gold and silver. Those are different ways that that works. Or even some of the top tier stocks, all of that. But the key here is playing into these dips as we go through what could be a bear period. Now, is this a whole bear cycle? We just don't know. There's so many factors that come in from the macro side that are different than what we've seen in the past, especially with what's going on with the Fed, the economy, and of course, internationally as well. Other things that are kind of funny, this is Samson Mao out there, is just, I fired the analyst and said Bitcoin is going under 60K. We'll never work in this industry again. Do you guys think we're going to see a below 60K Bitcoin? If you think so, just put yes down in the comment. I'm kind of curious if you think we're going to see a below 60. I'm kind of on the upside. I don't know if 60 is in the cards. Now, could we see us, 60s or possibly low 70s? That's kind of the area where I start to activate capital into at least Bitcoin, but I think some of the better capital would probably be going into ETH and a handful of other tokens out there with a pullback in many of these areas. Santa Rally targets 120. That's what these people are saying, is that we are pushing 120 after Bitcoin just approached 90K. I think the key here is anytime there is a slight move up with Bitcoin, you get these kinds of headlines. What I would simply say, caution, always caution. This is a very unusual cycle, and it's definitely a very unusual time of the year. Tesla also jumped to all-time highs, and of course, many people would look at this and say Tesla's kind of the crypto of S&P 500. I would agree with that. Tesla continue to fly, but I mean, when you look at what Elon is doing, I think what did he end up being in the more? I think the next tweet was kind of here it is. First person up to 750 billion. I mean, this guy's going to be a trillionaire probably next year. If SpaceX goes public, and this was something that just kind of blew my mind on SpaceX, and his theory of where energy is going to come for these data centers. And if you look at it, because many people are building infrastructure here in the U.S. all around, Elon's really looking at putting data centers in space. I mean, now you've got solar activity, which would be unimpeded, which would be unlimited. That would be why SpaceX could be just absolutely out of this world, literally, in terms of value when they do go public next year. So be on the lookout for that one. If AI and data centers are going to be a big factor, he's probably onto something. Now, CNBC said, hey, can we get a rally without a rate cut? Take a look to see what they said.
As it relates to the Federal Reserve, look, I think it's built into the market already that you're going to maybe get one rate cut, maybe another rate cut thereafter. But I don't think the market's reliant in the second half of the year on further rate cuts. And in fact, if you're cutting rates in the second half of 2026, we have some sort of problem in the economy. So I think Josh is right to highlight the earnings growth because we're coming off 4 consecutive quarters of double-digit earnings growth. And the expectation is that you're going to see that again as you move into 26. So I think what has happened is the personality of this market, it's becoming more discerning. It's becoming more discerning from the standpoint looking into 2026 and realizing there probably might be more rental opportunities than long-term anchoring in one particular investment theme. I think the market's going to rotate to a lot of different places, and that implies you're going to need, Scott, the 493 to participate. You cannot just rely on 7 individual stocks. You cannot rely on the AI halo to really lead the market higher. So I think that's what's going to be most critical for us.
Well, that kind of aligns with, our thesis is that swing trades are probably going to be the way to go this route to kind of in and out. And this is typical of all these down markets. There's always profit somewhere to be made. The problem that most traders face is, one, they don't understand the asset to go into, or they get greedy when an asset is running and they don't sell into it in terms of making profit. One example of that would be even gold and silver. If you look at where gold and silver is right now, this is a daily record high, above 4,400, above 69. That's right, $69. We're going to hit 70 on silver anytime. Likely that even as we record this, could be there. Point being is I'm holding gold and silver both. I am looking at exits now on gold for the first time after holding it for months. And the key here around this is many people are saying we're going to get a $6,000 gold. We could have $100 silver. Yeah, you could ride this up another 20, 30%. The question is, will it have the volatility on a downside? That I don't think so, but I do think you've got an opportunity here where you could set some stop losses on some of these things and be just fine. Speaking of taking profits, gold hit its most overbought level in history. Some people would say now's the time to dump on gold, exit out, even though Peter Schiff probably would not go that direction. But the point being is that maybe you take profits off the table, start to shift those into some other assets, whether that's stocks and or crypto, which are in some of these assets are highly depressed. Now, you might look at it in the sense of, is this a short-term swing trade or is it a mid-range long trade that I'm willing to buy at these lower levels, dollar cost further down, meaning chasing something like an ETH downward on the chart if it does go down? That could be some opportunities that you could take with these kind of profits. So again, these are strategies that many people are looking at right now because there are some ways to make it in this market rather than getting deep and too concentrated in single assets. That's a big problem that a lot of people do right now. Speaking of Peter Schiff, the rise on the price of gold and silver, 2001 to 8, was a sign of major Fed policy error. I agree with that. The harbinger of the 2008 financial crisis, I don't agree with that necessarily, but the current rally that began at 24 is signaling a bigger policy error that may have even more consequences. Now, either Schiff is right on this, or this is another potential false flag in the sense of what he has always yelled and talked about on gold. And then that is gold will eventually outperform. And it gets 1 year out of 10 that it does it. So the real question is, how does it play out in 2026? This will be a key factor. If gold goes back to back in outperforming Bitcoin and some of the digital asset space, this will get interesting on Wall Street going forward. Gold could get intriguing. And I think still we need tokenized silver, which we have not seen in the market, at least on capacity and scale. That'll be one to look at. Here's another thing. When you look at stocks, crypto seems very suppressed. Something feels off right now, and I totally agree with that. You've got to look at the upside to what we're seeing in the S&P, outside some of the pullback, which has been low on some of the AI sectors. But this is getting interesting because some of these cryptos are completely depressed. Question is, do they go down 80, 90%? Or we see some pull back completely into oblivion. Many of these projects may not necessarily make it out of this bear market. And this is something that we've talked about with a handful of analysts. This may concentrate on a few assets at the top. Because remember, you've got Wall Street and a lot of structured capital moving into the market right now, and they may not be willing to jump into the altcoin season as much. So here's the thing that gets me going, because you've got to look at how these tribal mechanisms work in investing. And Vlad kind of summed it up here in reference to how AI investors are working versus crypto. Take a look.
I think one problem you're seeing with the AI companies right now is AI technology is very popular. People are adopting it, but the AI companies themselves are very unpopular. They don't have that many fans. If you see criticism about, say OpenAI or Anthropic, the people rushing to defend them are either venture capitalists online or, AI researchers that work at these companies. But you compare that to crypto. If the crypto industry is under threat from, regulatory overreach, or even if just someone says something negative about Bitcoin, you just have an army of retail people that just take the knives out. And I think it's because the one thing crypto got very, very right from a very early point, from basically the genesis of it, is making it so that normal people can have crypto. The big private companies are held by wealthy insiders, so they don't have as many defenders. And I think that could become a big problem for them because, if it starts taking more jobs or at least disrupting the labor force at an accelerated rate, I think people are going to get angrier and angrier. And I think what's going to happen is if regulations come, they're not going to have people fighting. The everyday person might not be on the side of the big AI companies.
That is a good analysis, because that is one of the things that we've talked about often here is the tribal nature of crypto. Though it is its detriment, it's also its strength. And you look at some of the major categories out there, AI is clearly the one that is winning. That is a problem moving down the road, and it does kind of present itself in terms of a challenge for how investors might play into this, because again, this gets back to how the next 5 years is going to play out. And you could have a handful of crypto IPOs coming out next year that could win big, that again would have a huge tribal element to support it. So you look at this article right here. This, of course, is Ray Dalio coming out, Bitcoin inferior to gold. And he kind of hits on the three big ones that everybody always argues, which is traceability, security risk on if we do get a quantum hit, and then a lot of the component, which is the lack of appeal for central banks, because central banks are acquiring gold. So we know all that. Does that change your mindset on how you would invest, or would you just look at gold as another major asset that one is a debasement trade? At least it's not losing value, at least not at the level that we're losing it for the U.S. dollar. And just as a final reminder that even though gold is having a stellar year, and it may have a good 2026, if Bitcoin gets its life, this is one of those assets that moves very quickly and it will outperform again, just like it has in the past. So just be aware, it's all timing as well as time in the market. So another thing you got to look at right here is the affordability issue. And this is a big problem right now because it will change the face of the nation again. The number of multiple job holders now surged to almost 500,000 in October. This, of course, is to a record 9.3 million. This is crazy that 9.3 million people have to have 2 jobs to be able to make it out there. This figure has risen another 3.5 or almost 4 million since 2020. And if you look at that and also the potential right here that Americans are working primarily full-time and secondary part-time jobs jump to 5.3 million, this is insane. It only says one thing, and that is affordability is real, and that we are going to have, I think, an administration that starts to address it and stop saying that you just have this great economy. 45% of Americans now blame the high prices for poor financial conditions, near the highest reading in history, and this is coming from the Michigan Consumer Sentiment. That's where the consumer sentiment comes from every quarter. This is in line with the great financial crisis peak, which was in 1980. And of course, then you've got, really by comparison, only 5% of consumers now have blamed high prices in 2020. And that's the problem right now, is you have seen maybe a derivative or an accumulative of problems really since 2020. And it's now peaking with all sorts of things that are coming in from the administration that we're seeing right now. So it is a tough time for, I think, a re-election bid, which is next year, this time. This is something that has to be under control. Now, could this get corrected? Sure, could. It could very well get corrected in the first quarter, possibly in the second quarter, and it could come in strong and we could see a readjustment down in to where maybe inflation is slowing, affordability is starting to ease up, or there's some stimulus of some sort from the administration that kind of pushes it forward. Quick look at Bitcoin right now. I'm on the weekly. It's still on a red candle. If you look out on the daily, though, what we are starting to see was this little bit of a move as we jump up here in a short period of time and wicked up to almost 90K. But again, over the last week, still downward trend off of that 94 that we were dealing with on the high, which was just back on December the 9th, if you remember that. So be on the lookout. Do we see a trend upward? Because right now it is holding sideways. We'll continue to give you guys some heads up this week. I think we're going to be running videos for most of the week before Christmas, and we'll have a couple of predictions for you and all that good stuff. If you guys are not in the Barron Market Edge, that's our free group. We always leave a link down below. Check it out there. And, of course, hit me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.